So real quick, what he just went over was after 7 a.m. This is elongated. Like this price run is pretty elongated. He also said this FEG you wouldn't really use it too long because of this, and we are after 7 a.m. Um, what I'm also thinking is usually 7:30 we create a high or low for the day, so that could be something to be aware of and back test. So like here 6:37 we create like that high for the day. New York continues to move lower. Back here after 7 a.m. I mean, you could look at this as support to go back into the London range. However, we have this opening range gap there, and we trade away from it. 9:30 comes away, close below previous day low, close below previous day low, continues lower, holds this level here into 1400. So this whole price run from 10 to 14, that's a 4 hour run lower. That's 4 hours. 10, 10, 12. Wait, that's six. Wait, what? Am I 1 hour, two, three, four? Yeah, 4 hours. Cool. And then we have the flout from 1400 to 1600. I mean, this is apart from that. I was listening to a trader, ICT concepts on Twitter. He uses the 1400 to 1600 range, makes a box from it, and uses it as a flout. The flout is just that time range where I don't know if it's bond traders or some kind of traders are currently active, or I think it's the bonds. Is it the bonds? I think it's bonds. Oh yes, I did use this for help on the description. Um, what's the in ICT or DR trading? I think center recognize flow. No, it's not that. That's not it. But that's the okay, back into here. So we have that 1400 to 1600. We got, where is it? 1400 to 1600. Then we got 1400 to the New York session. Oh, this is clean too. We tapped in. We closed daily opens here. Close below it. We're trade back into this inversion for value gap. In here, we trade away from it strongly. Boom, that's amazing. I mean, you could take a long from down here. Maybe you saw this. I'll go long from here. Yeah, you can. I mean, you could trade all day basically with this. Like with advanced structure and knowledge, eventually you'll be able to trade every fluctuation. And we won't need to. Just will eventually be able to trade every single freaking fluctuation. So back to it, 7 a.m. 7 a.m. there. We're looking for the draw, so we got these highs, so that's the draw there. We got 9:30 in here. I mean, this is a tough day if I'm looking at it. I mean, you can't, I mean, not really, but no, you see this, you see that. You see the stacking, see your standard deviations from this side to this side. You got your 4 standard deviations, then reversal, boom. Super grateful for being able to learn this, by the way. By the way, did I mention we're learning and getting better in every day?
Because of these relative equal highs, and it's after 7 o'clock in the morning, and it creates this type of reversal scenario where it breaks down.
This channel.
Your eye should go right to, are we looking for relative equal highs or relative equal lows, or are we looking for inefficiencies?
That's the link there. So this channel,
you have to go with what the chart's giving you.
We're learning from him. ICT, hopefully he's okay with sharing this.
Now I'm forcing Caleb to do this for a month because I want to see that, number one, he can stick to the process of doing it over and over again. I don't want to receive texts from him saying what he thinks is going to happen. I don't care about his opinion, and it's not appropriate for him to have that understanding yet anyway. He thinks that he should. He thinks that that's going to be a measuring stick so dad can feel like, okay, mine's doing his part. No, I'm going to know you're doing your part by what I'm going to outline today. And then this weekend, when we see it together, I'll know if you've been doing it or not, because you can't make that up. It's something you have to journal. It's something you have to go through the process of studying the charts. You can't fake that. You can't watch 10 minutes of my video like my son Cameron did and said, yeah, I was watching your videos, Dad, and so and so and so. Okay. Then I asked him something else I said in the video, and he had no idea what I was talking about, because I know what he did. He skimmed through the video, listened for a couple buzzwords, and he fell into the same click a lot of people do on the internet. They want to talk with the language, but they have no understanding. But they'll use market replay to teach my stuff. That doesn't make any sense. You don't want to fake it. You want to be able to do it genuinely, and you want to have a genuine mentorship experience. Well, your part of this, your personal contribution in the initial stages, is what this is all about today. Okay, so yesterday I talked about the process of not going above a 15-minute time frame, and I know some of you that have a higher time frame affinities, like daily chart, weekly chart, whatnot, that probably feels very uncomfortable hearing that. And I've said this before, you don't need all those time frames. Now, when you have a model that you're risking money behind, it's important to refer to those things. But right now, the only thing you're trying to do is get familiar with reading price action and getting over that fear of missing moves and fear of not knowing. The fear of not knowing what's going to happen next, it's an enormous sense of, well, it's like a barrier. You feel like you can't break through this invisible force field of, I wish I could know what it's going to do next, because if I could just do that, then I could be profitable. And I'm telling you, that's not true. That's not true. But it has a necessary role in your overall development, and it needs to be the first thing. Where's the market likely to move directionally? Where's it going to gravitate to? And what time usually will these moves form? I introduced a very generic form of that yesterday. It's not complicated, and we're going to go through the rules very, very specific, and it's not a lot of them. It's not a whole lot of moving parts. And I'm going to clarify what I meant yesterday prior to 7 o'clock in the morning and what you're specifically looking for, because I got a question from one of my private mentorship students, and I went back and listened to it. I was like, oh yeah, I can see how that causes confusion. So I'm going to address that as well. I apologize if I confuse a little bit of some of the references to time around that 7 o'clock in the morning, because it does sound like I say, look for it before 7 a.m. And then later on, I say, you don't want to look before 7 a.m. So I'm going to clarify what I really meant there. And like I said, I'm not using a script. I don't have any kind of bullet points to go by. I know what I want to talk about, but because I was watching Price Action Live, my attention was on that as well as talking about what it is I wanted to cover. But yes, there was a casual lesson. This is a little bit more specific. So I have lots of charts available to me in hardware
that doji,
on screens that are off right now in front of me. I'm only physically working with a laptop computer. Most of you only have like a tablet or a singular computer screen or a laptop. Okay, and you can do everything from that.
1400.
Okay? I would counsel you not to try to put your faith in using just a smartphone.
That 1600 in here.
If there's something that you're observing and studying on, on the move, like you're at work and you're getting a bathroom break, or if you're on lunch break and you want to look at the market through your phone, I don't have any qualms against that. But if you're going to try to make an attempt to learn how to do this well and consistently, you need to have something larger than your smartphone. Okay? And I don't mean the one phone like my son Cody has. He opens it up and unfolds and it's a bigger screen. That's still not enough. You have to have a laptop at minimum. Okay, about 15 inches, minimum surface space. You may not have a trading view subscription that allows you to do some of the things that I'm going to refer to today. You do not need a sub 1 minute time frame, but I'm going to show you, for the people that do have that, how to integrate that into this. Okay, I mentioned it in passing yesterday, so now I'm going to give you the rules and how what it looks like rather in the price runs from yesterday and how to study today, because I won't be with you after the opening bell.
Then from 10 to 14. Oh my God.
And also the reason why I want to keep this short is because I have not been doing a lot of talking. And
the experience is just setting
a little over 2 hours. I got a little hoarse yesterday, so I want to make sure I can. I don't want to come to you tomorrow and say I can't talk. I lost my voice. As much as some of you guys really want to hear me say I lost my voice. So I'd probably still sit out here and go over the chart and without having to say anything, and still do the same thing. But people that don't know English, they'll send me hate mail saying I can't read what you're saying. Why don't you have subtitles? Because I'm not speaking; it's all being typed out. So your chart, if you have the ability, put all 4 charts up on the screen like this. Your upper left is 15-minute time frame, lower left is 5-minute, upper right is 1 minute. And if you do have the ability to look at anything less than 1 minute, you can put a 15-second chart. Not that you need it, but you're going to find out today that it is very, very informative for seeing what price is doing underneath these 1 minute candlesticks that you never really are aware of usually, or you probably didn't even think of it, okay, prior to investigating and studying it, because there's a lot of things that you would see on any other time frame occurring on that 15-second chart. And it's very forgiving. So as if you missed a move and you missed an entry, the 15-second allows me to get into a move if I missed my ideal fair value gap, or if I have a limit order and I have the order sitting inside of a level that I feel pretty confident that it's going to trade to. Sometimes I've had it, and if you watch some of my recorded sessions before, you can see where I have had limit orders where it goes up and touches the limit order, but doesn't go above it for the spread. And I've had one instance where it did technically go above, and the spread should have afforded me the fill, but it did not fill me. Guess what that means? That's the real world. That's what's going to happen to you. When you start trading, you're going to have limit orders that don't get filled because we're using such a degree of precision. That is a welcome struggle. That's a challenge that I enjoy having. And you're going to learn to have that mindset as well. Whereas right now, if you don't have a whole degree of importance placed around precision, when you don't get your fill on a thing, it's struggling point for you to wrestle with. Why did that thing take off without me? I'm never going to get another move. This is the only move I'm ever going to capture, and I missed it. That's what you think. That's what you feel. But me and my students that have done these things for years and years now, we're comfortable with, well, I was trying to be so perfect and precise about where I wanted to get in at so I can have a very small stop, very, very small stop loss. It didn't fill me, and it started running away. So I didn't get my best fill. We don't get upset about that. We're not cussing at the screen. Oh, you so-and-sos, you didn't give me my fill. Okay, that is an expression, don't be a dick for a tick. If you're trying to be very, very precise about your fills and your entries, and you don't give yourself flexibility and permission to see it not fill sometimes, you're going to have a real hard time in the early stages of order placement and learning how to trade entries, because you're going to be demanding perfection, and demanding perfection is an invitation for frustration and regret and struggle, and it's going to make your learning process a whole lot harder and longer, and you don't want that. So a 15-second chart, I'm going to say this and then we'll get into the business of the 15, 5, and 1. The advantages of a 15-second chart is that I can get into a price run that I missed on a 1-minute chart, a 5-minute chart, or a 15-minute chart, or any other time frame that I may be looking at. But for the rules that I'm placing on you, Caleb, these are the only time frames until I tell you otherwise. You're not looking at anything else. So don't send me a daily chart. Don't send me an hourly chart. Don't even ask me questions about any other time frame ever until I introduce some other reason for you to look at another time frame. Because this universe right here, okay, this whole solar system of price action is all you need. You don't need anything else. You literally need nothing else but this. I mean, truth be told, I said this before, I don't even need a chart. I don't need a chart to trade. But to communicate what it is I know that I'm not going to teach, I use charts to kind of bridge the gap. So it's a very effective medium. To prove that, it's your task to see what I'm saying is valid or not. So y'all have this entire month to walk forward and see what it is I'm talking about, whether it works or not. You all will be able to see if it's based on fluff or if it's really valid. I walked you through it yesterday live over a 1-minute chart, every fluctuation, telling you what was going to happen. There's still huge opportunity for you as the person in the driver's seat of determining what it is you're going to do with this information. Because there's, as you're going to see today, there's a lot of that in your disposal. You have a lot of input that you're going to bring to this. And I'm not asking you to send me email saying, okay, I watched this and this is what I'm choosing to do. Like I'm going to sit down and say, well, that's a good decision of what you're focused on. And I think this is a great, I don't have time to do that. There's too many of you that always try to reach out to me, and I physically don't have the time to respond to everyone. And that makes a lot of you upset, like I'm ignoring you specifically. No, I'm trying to ignore all of you. I've been trying to have a normal life, okay, and not have ICT-ism all the time. But the 15-second just simply gives you more opportunities to get into a move that's underway. That's really all I'm saying. Or to dial down and reduce the risk and the exposure of a stop loss that would otherwise probably require much more handles or pips if you're referring to Forex. It can be reduced very small because you're looking at a 15-second time frame. Now, don't think for a second that the 15 seconds just answers all the equation and problems of larger stop losses, because if you don't know how to read price action, and if you don't know what that 15, 5, and 1's doing, just because you looked at a 15-second, some of you are thinking, oh, he just gave me the shortcut. There's a shortcut. All right, ICT's the plug. Hey.
The shortcut is I can understand the structure. Or the opening gap. $1,400 to $1,600. That's the full fit. Dang, bro. That's amazing. It's amazing, amazing, amazing. All right, let me